of course, these ongoing optimistic comments the president has been making about trade, and something he will discuss in New York when he comes up to the Hamptons for a fundraiser, is something that has got a lot of people excited that maybe at the very least the chill with China will ease a little bit. There's no way to guarantee that. But the first talks that anyone is having on this subject since last spring are being deemed at least promising. We shall see. All right. So is all of this warranted? This optimism of the buying of, Walden Broad also a good sign of things to come? Let's get the read from RealClearMarkets Editor John Tamny, market watcher at Ghabour, and Gerri Willis from the New York Stock Exchange. Gerri, down there, it seems to be the trade is a very big focus, and the better things look to resolving an impasse, the better it looks for stocks, right?
That's absolutely right. I mean, people talk about how we haven't focused on trade, but it is a steady backbeat to any conversation you have with traders down there. They're concerned about it. They worry about it. And now all eyes on China, right, as these new tariffs go into effect next week. It's a big focus down here. I got to tell you, it feels like China's in a bit of an existential crisis right now. Growth is slowing, and there's fear here because of the strong dollar that there could be a capital flight risk. And when I say fear here, I actually mean fear in China that capital flight could be happening because of the strong dollar. So lots going on with this. It's always part of the discussion with any trader down here.
You know, I'm looking at that, John, and wondering what kind of a deal the president would have to cobble together to satisfy the markets. And I've always argued, simple that I am, and nothing with your complex and advanced brain cells, that almost anything would be welcome. That just resolving an impasse and moving on, whether it's deemed a big victory for the U.S. or not, doesn't matter. What do you think?
Yeah, I think so. I think ultimately investors want certainty. With certainty, they can move on. Isn't it interesting that we're talking today about Apple hitting an all-time high? It speaks to the importance of getting the China worry out of the way. Apple gets a quarter of its revenues from sales in China. What a disaster it would be for the world's most valuable company if we got into a tit-for-tat that led to higher tariffs on both sides. So hopefully resolution, I think, is what markets want at this point.
All right. Eddie, one of the things that the president seemed to intimate is he would wait, and he was saying this yesterday, kind of hinted at it, addressing reporters before leaving on Marine One from the White House, that he's willing to be patient. He's willing to wait to get the right deal. I guess I'm curious what the markets deem to be the right deal.
Well, I think the market just wants closure, and I believe the president has taken this stance because we are in a position of strength right now due to what's happening to China's stock market, and I think he realizes that. But at the end of the day, the longer this trade war concern drags out, the bigger of a risk it's going to have some negative ramifications on the market. I believe once we have closure on trade, we are setting ourselves up for a huge fourth quarter run-up in stocks, because right now that's the only dark cloud that's keeping it down. All the other fundamentals are as strong as they have been in many, many years.
You know, Gerri, looking at what's happening today and the different directions, for example, of some big tech names, and I'm going to include Tesla in like the big tech category, the visionary category. It's going south, Apple's going north, and confusion reigns supreme for iconic names here. What do you make, and what are people telling you about how far this Tesla thing is going to go for Elon Musk?
Well, I think the Tesla thing is going to go very far indeed. I think they'll get new leadership. Maybe that will stabilize the stock. But the thing about the big tech names, when you talk about Apple, Alphabet, you talk about Amazon, all these FANG stocks, what traders tell me is that, look, at the end of the day, the business models for these companies are all very, very different. You have to analyze them on the basis of that and not just think of them as all samey, because, frankly, they're not.
You know, John, looking at the Tesla stuff, you always worry about a spillover effect here. I don't know beyond just this company, its limited case, and this iconic leader. But who benefits in the event that Tesla stumbles?
I wouldn't worry too much about a spillover effect. It's kind of like saying because the Mets are awful that the Yankees will be awful because they're in the same city. Tesla is a unique company. While I don't like the subsidies, I think Elon Musk is a genius, and so it's hard to imagine that what's going on in his mind would impact others. My sense is that other companies are looking to move in the electric car direction for good or bad, and so probably what's good for Tesla is good for other car makers, in that if Tesla succeeds, it has an impact for everyone else.
Eddie, when you look at that whole sector, and I know this is me forcing it into the same area, but the so-called the visionary companies, do you worry if this drags out, not necessarily for Elon Musk or for Tesla in general, that investors and those who would like its products will start leaving it on the belief that, you know, bigger troubles are to come? Let me cash out my deposit and take it back and just see how this all settles?
I don't. I think Tesla is a really isolated situation here. I don't think it's going to affect other companies in that space. Although what I will say is I think those companies in that space may look at it as an opportunity to capture market share that maybe they didn't have an opportunity to get 3 weeks ago before Tesla started to get into the troubles that they're in here in the short term.
You know, also, John, I want to flash back to you a little bit on this China thing. We're getting a couple of more details that they are open to discussing anything and everything, we're told, when they come to the United States. And an issue that has come up is how we treat Iran with threatened sanctions in countries that deal with Iran. China, wouldn't you know, is included in that list of countries that continue to do business. So we've got a multi-pronged approach where we could hit them not only on trade issues with us, but continuing to trade with Iran.
Yeah, and again, I say that's dangerous. Let's never forget that China's economy is very important to the health of the U.S. economy. U.S. stocks are priced precisely because investors assume that U.S. companies will continue to sell in large part in China. Again, Apple gets a quarter of its revenues from there. Boeing sells a quarter of its planes from there. It's Nike's second largest market. GM sold more cars there in the first quarter than it did in North America. And so it's very dangerous when we hear about, okay, what's going to hurt China? If you hit China, you hit the best and most dynamic U.S. companies of all.
All right, guys, I want to thank you very much.